The Federal Reserve cut 25 basis points yesterday. Now you know that. What you may not know is that they quietly announced something else. Something that we cannot call quantitative easing, but that certainly rhymes with it. The Federal Reserve is starting to expand its balance sheet again. It's a subtle tweak, it's not a huge move, but this means they're seeing something under the hood in the financial plumbing that's making them nervous. Could be interbank liquidity, could be something in equity markets. Either way, they're not just cutting rates, they are proactively adding liquidity to the system. No matter what they call it, this is a form of soft QE. Very soft, but still the balance sheet is now expanding. And that announcement is what weakened the dollar. Now we're looking at EURUSD going up, obviously is dollar weakness. This exact announcement is what weakened the dollar during the event. Now in this video, I'm going to show you exactly what the Fed is hiding, why Powell accidentally admitted the economy is worse than you think, and how we might exploit the next massive mispricing for the January FOMC meeting. So when the Fed cuts rates, they're lowering the cost of money. That's policy, okay? And that's bearish USD. And when they expand the balance sheet, they're increasing the supply of money. That's also bearish USD. Here's where it gets even better. During the press conference, Powell said something very important. Listen to this.
A couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought.
He's basically saying that the NFP numbers were overstated by quite a bit, and the real numbers are instead negative. So okay, that's quite a big deal if we think about it, and in fact that's what led them to cut rates yesterday. But at the same time, a bit contradictingly, he's also put the January FOMC on hold. They are in a wait-see mode. So Powell is saying that they're done for a bit, they want to sit back and watch the game. So we have a central bank adding liquidity and admitting the economy is weaker than it looks. And yet, listen closely, the market is pricing only a 20% chance of a January FOMC cut. This is the opportunity. We're back in a market that is severely underpriced in the next move. The pause narrative relies on something important. Relies on the data holding up for the next month or two into the 28 January FOMC meeting. But Powell just told that the data is trash. Powell just told that the labor market is weaker than they thought. So hear me out. If we're going to see any hint of further weakness in the US labor market data, which by the way, the NFP will be released next week on December 16 with the unemployment rate, everything. This is the November NFP. It's being delayed by the shutdown. I'm going to explain you why this is very important in a minute. But basically, the second that this number shows a bit more weakness, further weakness, because remember, the labor market has kept weakening up until now, essentially. If also this number shows a bit more weakness, the no cut in January goes completely out the window right away. The FOMC pricing for the 28th January is going to shoot up. So if we get weak labor data next week, the market will immediately, and I mean almost violently, start pricing in that January cut. This is what leaves room for a lot more dollar weakness. Follow me here for a second. We have a central bank that is already nervous enough to expand the balance sheet for whatever reason, a soft QE play. And now if you hand them a weak labor market report next week, that January FOMC meeting will go from a pause to a cut very quickly. So the question is, will the NFP next week actually print off? Well, we cannot answer that with certainty, but remember the context. The government shutdown went on for about half of November. So there should be some weight to these numbers, okay? Especially the unemployment rate that's a risk of ticking up higher from 4.4%. I would say at least up to 4.6%, definitely 4.5, but we'll see. Okay, that's a risk. It's not going to be a certainty. This can print anything it wants. But we know that contextually, it's likely to print softer again. And if it does print weak, that's going to be a huge deal, because Powell just told you the labor market is weaker than we thought, and it's a risk, it's a vulnerability, and so they're going to react to it, okay? If the NFP prints weak, the unemployment rate ticks up, then we'll see the January FOMC meeting go up to at least 70% chance of a cut. If that happens, that will send EURUSD to 119 at least. So watch the NFP next week very carefully, and remember, the balance of risks is entirely skewed to the downside for the dollar. The Fed is expanding the balance sheet. They're telling you that the labor market is fake, essentially, and the market right now is underpricing the next move. So what we do here is monitor what the central bank is monitoring. Okay, the data matters when it matters for the central bank. So the way we analyze the market going forward is by looking very carefully, very attentively to the labor market data. If there's any weakness there, then we'll know the market will want to price in that rate cut for January in advance. It doesn't wait for January. It's not going to wait for the FOMC in January. It's going to price that rate cut already today. The same way it priced yesterday's cut from late November when the Fed said, hey, we're going to cut in December. It started to price that in advance. The same thing is going to happen to the January FOMC meeting if the labor market prints soft next week.